Welcome. Over the past decade, companies have been cultivating capabilities to produce data for an ever more connected world, from connected sensors to social media networks. For years, companies have struggled to unlock the value of that data. Now, with the age of AI, companies are able to unlock the information hidden deep in data. Much of this has been made possible by the Graphical Processing Unit, or GPU. If you're a gamer, you know premium gaming relies on high-end GPUs, and the best GPUs come from NVIDIA. NVIDIA has skyrocketed to become a marquee player in the microprocessor industry as they have stepped up to supply the crushing demands of the data center.
The global semiconductor manufacturing industry has many segments. In this market, we will focus on the microprocessor segment, consisting of CPUs, GPUs, and SoCs. On the supply side, we start with highly specific raw materials, manufacturing machinery, and chip design blueprints. Microprocessor firms then build and scale chips to meet the demands of data centers, personal computers, automobiles, medical devices, and smartphones, to name a few. The global GPU market size was valued at $20 billion in 2019 and is projected to reach $200 billion in 2027, growing at an annual compounded growth rate of 34%. Much of this growth is driven by AI. Many household names compete in this industry, and market consolidation runs rampant. Intel is the leader in the integrated GPU shipments, while NVIDIA takes a leadership spot in the discrete GPU segment, followed by AMD. Optimal GPU performance, power utilization ratio, price, and extensive ecosystems are all key factors which democratize heavy data workloads.
NVIDIA was part of what is referred to as the Big Bang in the world of AI back in 2008, when deep learning neural networks were run on NVIDIA GPUs that increased their performance by a factor of almost 100. It has a stated goal of creating the world's premier computing company for the age of AI. NVIDIA has capitalized on the rise in demand in AI and data centers by leveraging its market-leading GPUs and the CUDA software platform to become the leader in the AI data center space. However, they are still reliant on other vendors for the CPU and networking fabric technology. The growth in AI over the next few years is expected to be in the CPU, FPGA, and ASICs market, as well as at the edge for inference. NVIDIA plays a role in neither of those markets. To become the premier silicon vendor for AI, NVIDIA needs to do the following. Bring a CPU to pair with its GPU, and a networking fabric to mesh these to create a single SoC for the data center. On the other end, they need a low-power CPU for edge devices and the ability to extend the reach of their GPU to these edge devices for inference. The Mellanox acquisition brought the networking fabric IP into NVIDIA. What's now left is the CPU technology.
As NVIDIA progresses through the transaction phase and into the integration phase, they need to be mindful of merging too quickly. Dismantling any key resources or capabilities may have a lasting impact on their ability to drive value as a single entity or to retain top talent. In the short run, Jensen and Seegers need to unify both companies under a singular vision of creating a CPU-GPU combo. This dual-sided objective will merge talented R&D teams together while also pushing their individual strengths to capture more of the growing data center market. In the long run, NVIDIA and ARM need to maintain a vision of a turnkey SoC solution for the AI evolution. Becoming a one-stop shop for their customers, they will be positioned for the explosion of 5G and IoT devices coming online over the next 5 years. They need to maintain focus on expanding their edge markets between end devices and the data centers. Our recommendations will guide them in becoming a superior provider who has offerings at every segment of the AI data center landscape.
To meet the firm's objective, NVIDIA will need to ensure that after the acquisition of ARM, their V2C gap is larger than before. NVIDIA and ARM together will need to be greater than NVIDIA and ARM by themselves. Operationally, NVIDIA sells GPU hardware that sits on their books as inventory for about 80 days before selling to the end consumer. Their operating model is very similar to the competitors. ARM, however, operates under an IP licensing model where they hold little to no inventory. As NVIDIA considers future integration, their operating model complements one another where they can operate sequentially. The deal to acquire ARM will be roughly $40 billion in cash and equity considerations. When assessing their deal costs and projected total addressable market, the firm only needs less than 4% synergy to make their money back. If they can obtain 10% synergy, they can more than double their value by 2023. If Jensen is correct about being able to double NVIDIA's TAM by 2023, ARM's value could be more than 6 times their value today. Based on their merger and acquisition capabilities, the acquisition of ARM makes sense financially.
We know NVIDIA drives corporate growth through offering superior value to their customers. Leading competition in this industry will demand that they offer a compelling value proposition to the AI compute landscape regardless of where they end on the continuum. From the warehouse to your house, the AI revolution is driving growth across all industries. That is why NVIDIA needs to continue to make significant investments in value for their customers. By following our recommendations, they can be sure that they will be positioned to capitalize on growing demand in this market for years to come. Thanks for watching.